This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. Markets move fast, and if you're not ahead, you're under. It is Tuesday, July 28th, 2026. Yesterday, paper algorithms sold the geopolitical peace pause and temporarily crushed the energy complex. Today, the physical market is violently taking its revenge. The relief trap has officially sprung shut, and shorts are waking up to massive margin calls. Let's get you caught up for the open. First up, the 60-second commodities flash. Brent crude has reversed, surging back up to $94.30 a barrel this morning. Refiners realize the Maritime backlog remains unresolved and use the headline-driven price drop to aggressively restock. The logistical grid is still severely broken. Millions of barrels are stuck on rerouted tankers around the Cape of Good Hope. The structural floor for energy is incredibly rigid, detaching from paper rumors. Meanwhile, silver pushes higher pre-Fed, clearing $62.50 per ounce. Industrial buyers are front-running the central bank, securing their physical Q4 manufacturing needs today. They are buying atoms, not promises. Tech metal refuses to slow down as manufacturing demand outstrips paper supply. The physical bid is relentless and accelerating. Copper drains the LME. The squeeze is accelerating, testing $13,950 per ton. Overnight data registered another catastrophic drawdown in visible warehouse inventories across the globe. Demand is peaking at record levels. Infrastructure firms are bypassing the futures curve and demanding immediate physical delivery of raw concentrate. The physical scarcity is now the primary driver of the copper tape globally, and there is no relief in sight. Finally, fertilizer shock returns. The brief dip in oil prices did absolutely nothing to fix the agricultural input crisis. Global urea and phosphate prices caught a secondary bid overnight as European natural gas prices spiked. The baseline cost to plant the 2027 global harvest is officially locking in at multi-year highs, cementing sticky agflation through the end of the decade. Caloric costs are being baked in. Let us take a deep dive into why physical commodity buyers completely hijacked Monday's algorithmic sell-off. The paper market bluffed, and the physical market called it. Refineries run on crude oil, not headlines. The structural floor is set. The data hitting global terminals this morning is a masterclass in the difference between trading derivatives and trading atoms. Yesterday's drop was a textbook headline overreaction by algorithms. Refineries run on actual oil. Algorithms saw a peace pause and dumped paper, but refineries run on actual crude oil. When Brent dipped near $90, supply managers aggressively bought the dip. They know the floor for energy is rigid. A political ceasefire does not instantly teleport barrels stuck around the Cape. The logistical grid is broken. The reversal to $94 proves that the industrial bid for energy is incredibly rigid, regardless of peace rumors. Tomorrow, the Fed decides its next move. Historically, precious and industrial metals freeze up and consolidate before FOMC. Not this time. Silver and copper levels prove that material scarcity matters more to tech consortiums than the cost of capital. AI hyperscalers realize the Fed is trapped. If they cut rates, inflation runs hot. If they hold, they cannot print more copper to meet demand. Tech is buying physical today because they know it won't be there tomorrow. The complex is detached. Look closer at the fertilizer floor. Fertilizer production is energy-intensive and requires months of lead time. A one-day dip in oil prices does nothing to fix the structural elevation of input costs for farmers globally. Farmers are locking in exorbitant contracts for upcoming seasons today. This guarantees that the caloric supply chain will remain hyper-expensive, keeping retail grocery prices structurally elevated well into 2027 and beyond. Here is the trade flow take. The physical market is back in the driver's seat. Yesterday's rally was a window to load hard assets at a discount. Do not short the momentum in copper and silver heading into the Fed. Maintain energy longs and stay insulated against agricultural inflation. Head to TradeFlow TV to stay ahead of the curve. Stay liquid, stay sharp. See you tomorrow for Fed Day. Have a great session.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.